Hello traders and welcome to my YouTube channel React to FX. As you can tell by the title of this video, it's all about the objective approach versus the subjective approach whilst trading FX. And the outline of the video is going to be as follows. So I'm actually going to be doing a live backtesting session, and it's basically going to be basically facilitated around the trades that I've taken during the week. But before all of the back testing, I really want to touch on a few key important subjects in the Forex industry. So the first topic is the sort of order flow. And the term order flow, it sort of basically means that you're waiting for mitigations to occur, right? Now, by having this sort of approach to the markets, it's very, very subjective to wait for just a mitigation to mitigation without actually having a confirmation or a validation sort of familiarization when it comes to entering or executing trade ideas. So basically, let me just annotate how order flow is actually presented in the Forex industry. Just bear with me while I just draw out these rectangles so I can. There you go, perfect. So essentially what order flow is basically waiting for entries from the buy to sells that are at the top that are broken structure. People are waiting for entries from this area, followed by down coming into this area, followed back down coming into this area, and you can see that they're all breaking structure, etc., etc. Now, when you're looking at this, does this representation of what I'm depicting here show you the real sort of market behavior? It doesn't. It's not a realistic approach to how the market moves, right? This is unrealistic. And if we have, and we do see this is tends to be trend line liquidity getting built up into the market, right? Now, all it really takes is time and a reaction, i.e. an inducement or just an inducement to occur from the left, for price to have that reversal and take out all of that liquidity very aggressively, right? But we'll get into that when we go into the backtesting session a little bit more, so you can have a little insight into the way that everybody in my community trades and how we place trades and get into the ideas. The second idea is basically about the Asian range. So a lot of traders will tend to basically spot the Asian range, have the indicators on, etc. The Asian range is like this. It has the midline in the middle. Let's just say that the high has been taken out. Automatically, a lot of traders just think, oh, I'm just going to place a trade now and aim for the low. Now, having that approach come into the markets is also very, very subjective. What do I mean by subjective? I mean that there's no actual objective viewpoint. So there's no actual method or system in place that actually tells you that this point is going to reverse based on what's going to the left. And I don't mean just mitigations, right? I don't trade like that. So there's no order, there doesn't have to be an order block to the left, etc. What we want to see is we want to see clear liquidity being taken out of the market, or as WWA like to call it, inducements occur in the market, right? And these are the themes that I do teach within my one-to-ones and in my community. And it just keeps everything very objective before we enter the market and looking to put an investment in place, like, or enter the market with an order there. And the third thing, sorry, that I want to touch upon is random OBs in the market, right? So what I mean by random OBs is, let's just say we have a H4 area here that is a sell to buy, and a lot of people, let's just say this is broken structure or whatever internal, a lot of people would be trying to frame an idea to buy the market at this level, just instant executing price to break this high, without any confirmations to the downs, without any confirmation as price is approaching the zone, without any sort of objective way to actually enter the market. They're just literally simply waiting for price to touch the open, putting their stop loss below the low and entering the market. Now, having this approach with the market is also very, very subjective, and looking for instant entries as soon as price approaches the zone just leads to frustration and many unnecessary losses. And it just just stay away from it, you know. And when I touch upon the solutions of all of these different themes that I'm talking about, it really makes sense, and the insights should sort of help you formulate a sound trading plan, um, if not guide you into the right direction when it comes to trading your system, right? So essentially the last point was just about indicating based trading. So like there's a lot of traders and there's a lot of different strategies out there that even based on like trend line crosses and engulfing above this line, a lot of traders will just instant execute a position based on that engulfing with stops below, just because of the MAs have crossed over, and that way of looking at the market is just again very subjective. You want to keep everything objective as possible. And it just keeps your trading a lot more peaceful and a lot more performance based rather than outcome based. Um, so essentially, the solution to all of these things quickly is basically for the first one, order flow, right? We just have to wait for confirmations or liquidity to be taken out of the market before we actually look to enter or execute a trade, right? And we have to have a system in place to follow objectively. So entering the market meets all of our criteria, like all of our confluences have been checked off and our criteria have been met. Therefore, we can then enter the market and place our capital at risk. Now, the second thing now, the Asian range, what I touched upon before, it can be a very, very, very vital tool for a lot of traders. And what I mean by this is if you're predominantly a London trader and you like trading the London session, it's a very good pre-analysis tool for the London session if you have an objective view set of what to look for and where reversals and continuations can occur during a session. So these are very, very key important things that I do teach, where reversals and inducement zones are within the market and how we can validate a trade out there from those levels. Because just because price has as per se induced something, it doesn't give us the signal straight away to jump in the market and put our capital upon risk. We want to have a validation or a confirmation before we put any of our investment at risk, if that makes sense, because we just want to stack up our probabilities in our favor. Now, the third thing, the order blocks, right? So using order blocks in the past, as I said, is very subjective. If you're looking back on like a H1 or H4 and just finding a zone or order block and looking literally just to place an entry on it with your stops below and your target at another structure called level, etc., it's very subjective without having a objective system to approach this level. So as soon as you're looking to enter the market, you should have a system that either confirms this entry and gives you the go ahead to enter. If not, you're just basically gambling the market at any random given level. Like order blocks are everywhere in the market, right? And you don't want to use an order block that has happened like say 4 or 5 months ago. You want to use an order block that's in the same week or in current data, you know. So current data order blocks is literally all I use, and I'm going to show you once we get into the backtesting side of the video, you're going to see how powerful my strategy and my outlook is within the markets and how I'm able to capitalize on all of these moves throughout the day and throughout the week, consistently with the same objective approach, which I'm very excited to bring you guys. So getting into the video then, so we can start doing the back test from Tuesday, because these are trades that I've already taken myself personally, as I have said, right? But the purpose of this video is basically to show you the outlet, because I've been through it all, right? I've been through smart money concepts, going through studying ICT, BTMM, all of these foundational to smart money gurus per se. And I've been through it all, as I said, guys, and like I've been through all of the strategies, all of the methods, all of the sort of formulas that they tend to teach. And I've tried to facilitate trade ideas from that. And that has led to many, many losses, many blown accounts, a lot of frustration and disappointment within myself, until obviously you hit that breaking point and you hit that turnaround point and you actually start viewing the market through a different lens. So let's just break down this sort of price, this sort of price action that's occurring in this little cluster here, right? So looking at this price, right, a lot of traders especially me when I didn't have an objective view of the markets, would have seen this as like a breaking structure, right? So what a breaking structure is, I'm sure you guys know, like these that my mentorship and my Discord and my community, all of my students have sort of a basic understanding of structure, etc. And that's how they're able to pick up on all of this. So if you don't know anything about structure, I do suggest that you do have a few browsers upon structure and just get the basic fundamentals before you sort of start watching my videos, because these are quite advanced concepts that I'm going to go through right now. So essentially, this is a breaking structure in the market. And at the top, that leaves this smart money order block. Now, if you want to be specific, we can drill this out. So let's just go. Sorry about this. So let's just drop down on the M1 and see in the area if we can find a refined point in the area. Whilst I'm doing this, guys, just have a think about, is this how you guys are trading the markets? Is this the approach that you guys actually have when you're looking at things? No. So if you're a smart money trader, I want you to be completely honest with yourself here. This order block at the top looks very clean, right? Right, it's broken structure to the downside. It's a good order block to the top. A lot of people will be looking for entries based on sells from this zone, from this area, right? Let me just drag this all along so you can see what I'm trying to depict here, right? So let's just say, okay, cool, that's it. Now, so we're approaching London session. We've had this breaking structure. We have identified our order block where the market can reverse upon. That's literally how I used to trade like a few years ago. Like, no kidding you guys. This is, and I know still there's a lot of traders that do look in the markets in this way, right? Now, the way that I see this, right, I see points of liquidity in the market. So I see this point as a point of liquidity in the market, right? So this this shaded color of this order block that I've depicted here is usually what I call my trap block, right? And there's a very objective way that I identify traps in the market. And in my community, a lot of my traders know how to identify a trap based on where it is in the day and what price is done before or after that. So this is what we would call our trap and also our zone of inducement, right? We want to see an inducement from this area before entering the market for sales, right? Now, what you may be asking, why are we looking for sales in this area, right? Now, if we look at the high time frame, we've obviously had that. We've obviously had a lot of sell side momentum, right, on the higher time frame. Yeah, so in this leg, we've had a lot of sell side momentum. We've also clearly wicked this H4 structure point in the external structure point, and price has literally made this gap down and push price up and sweep the high. Now, potentially what we could be looking for is sells, right? That's what's in my sort of viewpoint, that's in my market. And it is a systematical way that we do look at it. I'm just trying not to give too much away because it isn't fair for my students and for my community if I'm just going to give everything away for free on YouTube, if that makes sense. Even though this is an educational platform and I do want to educate you guys and give you as many insights as I can in the way that I trade. But there is a limit to what I can give you, as you can appreciate. So looking at this, we have this zone right now. As I said, this is a zone for me where I'll be looking for a reversal in the market or potentially above this high, right? So above this high is liquidity, above that high is liquidity. They're both inducement points in the market. And that is where I'm looking for my reversals to occur, right? Simple as that. Now, let's play this video. Let's play these bars along. And let's see what moves we can actually catch, right? So this is about 7 o'clock. We're just going to play this and observe on a 15-minute, and we're going to see what happens. Okay, brilliant. So as you can see, if you had any limits or you was even trying to sell at this region, you would have been taken out of the market pretty aggressively in this zone, right? Now, if we drop down onto a 1 minute, I just want to point everybody's attention to the sensitivity of price of these wicks and this sort of accumulation area that is going on within price. Now, this is giving a lot of traders enough time. So if we count these candles, that's 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, 6 minute. So in a 6 minute window, right, we can assume that X amount of sellers have been attracted in that space to actually sell the market from that point of interest that has broken structure to the downside and is a very clean M1 quote unquote smart money order block or a buy to sell. Now, we are approaching at the top of our order block. Now, the trap has been taken out and we're coming close to our second point of interest. Now, what we need to do now, what I teach is how we can confirm the order block at the high now, right? So it's pretty simple. To me now, this area here is pretty much confirmed, right? It doesn't get any easier than this, guys. What I do teach as well is exactly how to draw your POI. I don't want to get into that as well because that is very, very quality sort of information to understand and have, and I don't want to give that information out for free on YouTube. But let's just basically put a pending limit here, right? Now, I actually had a 2 pip to 3 pip stop loss on this trade. I can't really remember at the top of my head, but I was literally waiting for price to come back up inside of this zone, and my first target was this low, and it was for I think it was like a 1 to 10. If I have like a 2 pip stop, yeah, 3 pip stop loss is a 1 to 10, right? Now I know what you guys are thinking. Oh, this is all hindsight. He's rewinded this video, and he's basically just seeing everything in hindsight and just basically doing it based on what he's already seen in the markets. Now, I've actually placed this, and I've got evidence on my Discord that I posted that I've actually placed this sell, right? Enough talking though, let's go into this and start playing price. Okay, as you can see, price is just basically messing around. Now, at this point, a lot of people will think, oh, it's far from my entry. This is no way you're going to tag me in, etc. I'm also monitoring what's happening at the lows as well at this point. So I'm actually seeing, okay, can we confirm another order block to the downside before actually coming up above to our entries, right? Which gives us the opportunity to hedge a position, right? Essentially gives us a position opportunity to hedge a position. Okay, so that wick to the downside after this confirmation that we have in price, and I don't want to go into that too much because that is another key feature of the sort of structure of my mentorship, and how we validate and confirm order blocks is one of our modules that we have when we go through one-to-ones. But essentially, I would look to enter the market on this aggression down with my stops below this low, let's just say 3 pips. And just to be in the safe side, if I am looking for sales here, I just want to have my my sort of risk covered. So I want to be in buys before I'm actually trying to get into sales, which is quite advanced. And I don't really want to show you guys that for now, but I just want to be as generic as possible because obviously these are the trades that I've actually placed during the week. So I'm trying to depict that during this backtest, so you actually get my thinking process and my thought process. And you can see we get that nice reaction straight away from the market, right? Now we can see we're tagged into our second trade also. Okay, we have a bit of drawdown. Brilliant. Okay, fantastic. Okay, so we have a lovely reaction in the market from our initial trade. This trade has been taken for break even, whatever, but we just wanted to cover that initial risk that we have in the market, just so we're playing every probability. And that's very aggressive to do, and I won't recommend that for now. But because I've seen sort of price delivery confirm something to myself here, I took that buy up to the entry, essentially, right? And you can see within literally the space of an hour or two, we hit our targets for a 1 to 10, right? And this is depicted here. So if you can see 3, 4, 3, 4, 7. What was this entry? 3, 4, 3. Yeah, so my entry was actually up here, higher somewhere. It was actually here. My stops were above the high. That was something like my entry, right? There's actually a reason why it was a lower time frame entry, and I speak to all of my students about that, how we can get in. And it's basically an unsaturated way to look at the markets, because order blocks, let's be completely honest, guys, it gets a lot of saturation now. There's a lot of people trading smart money, and the concepts do become traps as you've just seen. And yeah, I hope that has been insightful for you guys to see. And this is not just like one of the trades that I've just caught. Like these are all of the trades that basically EU even I'm catching the same sort of themes, the same sort of formats. My students are catching the same sort of moves as me. It's all systematic, and it's all sort of there's all an objective approach to the market, and that's how we're able to catch these moves, right? We're able to catch GU yesterday, which flew completely. But yeah, if you guys have any questions during this video, just pop it in the comment section. I will get back to all of your comments. Also, guys, please leave a thumbs up and subscribe. It really helps with the YouTube algorithm getting this content out there. Obviously, I want to make this beneficial for both of us. So obviously, if I'm getting the views and I'm getting the audience, I also want to give as much knowledge and content and education out for free as much as I can do as possible without obviously obstructing any mentorship students' payments and stuff like that, because they've obviously paid for a service. And if I'm giving everything out for free, what's the point of them paying? So we have to be fair and obviously stick to that. But essentially, yeah, so if you guys have any questions, pop them into the comment section, as I've said. But I will also leave my Instagram below, just so if you want to check out any of my trades. I have like a highlight story on my Instagram page of 2022 trades that I've taken throughout the year so far. And yeah, you can have a look, drop me a message if you're interested, and I'll give you some information about how the one-to-one mentorship actually, the structure of it, and I'll drop you some information about that. But yeah, guys, for now, I will catch you in the next video. Guys, take care and have safe trading. Bye.